Welcome to the Member xCite presentation. This is a chance for members to increase their profile amongst the businesses here and online. It's not a sales pitch, but a 10-minute insight into your field, a business innovation, or interesting area of your life. The concept is to provide great content that's helpful or interesting to the audience, and members are welcome to apply to present an xCite across any of our events, as well as our Facebook Lives, reaching audiences of over 10,000, building your brand credibility, and exponentially growing your business.
Our guest here this morning, Peter Lucas from Kestrel Solutions. Peter is a chartered accountant who specialises in assisting businesses to improve their performance. He's a business coach and profit improvement expert with nearly 40 years experience, and he's been a registered liquidator for 25 years and worked in insolvency for most of his career. And at this point in time, in the way the economy is with our shutdown and everything that's going on, this is a really important role that he's playing for his clients and the wider business community. During his time, he's been involved in running well over 130 businesses across a wide range of industries, including lots of hospitality businesses, a radio station, correctional centre, medical research business, real estate, manufacturing, and a shopping centre. This is often left to successful turnaround of sale of these businesses. With the insolvency experience Peter has, gives him great insights as to how businesses operate, why they fail, and how to improve business performance both operationally and financially. And he now uses this experience and his skills in helping businesses succeed and supporting them on their journey to success.
Thank you, Loz, and thank you very much for the opportunity to BX for having me on today. I'll start off with a couple of well-known business sayings, which I think are very relevant to our current circumstances. The first one is that turnover is vanity, profit is sanity, cash is reality. And the other one is cash is king. And the last part of cash is reality and cash is king have never been more important in the current circumstances. They are the things you've got to be measuring and understanding where you're at for cash. It's interesting, the government in their stimulus package has focused on the vanity, as in the change in turnover as a way of measuring people's eligibility for JobKeeper, the guaranteed loans, etc. And it's interesting, I think it's because simplicity, it's easier. But I noticed in the Financial Review this morning that the tax office is concerned about the fact that people have been manipulating their numbers so as to be eligible for JobKeeper, and they will be doing audits down the track. And I think you'll see with the review in June that we'll see changes and maybe having to reapply to establish that the quarter till the end of June that you did have the actual drop in income. So one of the things they're saying is people shifting their invoicing from April to May to make sure they comply. So it'll be an interesting space. But today's topic, to reopen, not to reopen, and it's not just the businesses that have fully closed down, but those that have seen a significant drop in their business and have shrunk back. And now with the restrictions being eased, do they start cranking their business up, or do they reopen if they're ones that have either been forced by law to close or made the decision to close because of the circumstances? Not all retail businesses had to close, but a lot chose to close. And so the question now is, do we reopen or not? And I think there's a process you've got to go through in making this decision. It's not going to be an easy decision for a lot of people. Some it will be very easy because they've got the financial resources. But some will be a very tough decision, and making the right decision is going to be very important for a number of reasons, which I'll come back to. And I think it's, when we see all said and done, you need to have the objectivity in making a hard economic decision and not one driven by ego and pride. And so I'm going to step you through a process which I'm talking to my clients about and using them to make the decision. And sort of a now, where, how approach, which is how I do all my planning with clients, is now, where, how. Where are you now? Where do you want to be? And how you want to get there? And very quickly, the where is sort of looking around 12 to 18 months' time, rather than sort of trying to do some, 5-year plan. No point at the moment, just it's about survival. In that regard, looking at the now, in very simple terms, but it's very powerful, what is your cash position? What is your overall financial position? Do you have the resources to reopen? What is your position with your staff? What is your current stakeholder relationship like? How's your rapport and relationship with the bank? And probably look at that from a pre-COVID. Banks have been very accommodating to date, but they'll look at things in light of what they thought of the business pre-COVID as things come out. Your staffing and, what's your current business model? We're going to see a new world out there. And we've got a need to understand how our business model is going to change. And to give you a little story about that, I was talking yesterday to a real estate guy, property guy, who specialises in retail. And I sold a shopping centre to his client about 2 years ago. We settled, it was in June 2018, so it's almost 2 years since the settlement occurred. It was a $30+ million transaction. And we're talking about the prop in retail and how it's going to be very different going forward. They're not going to want the same footprint. They're not going to want the expensive fit out. And they're going to be, and I said, if you're in retail and you're not online, you're going to be dead going forward, because people's behaviour and shifting to online shopping compared to before, and people that never did it now doing it, become the norm. And certainly in the near future will become the norm. So that's a changing model. How are things going to be different? Office workers, working from home, will they continue to work from home going forward? Those that hadn't traditionally. And I've known people that have been working from home for 10 years, maybe 4 days a week. So that changed. And my brother, who runs a large charity, talking to him yesterday, he's sort of looking at, they're probably going to go to a 4-day week in the office and 1 day you work from home, which will probably be a Friday. So we're going to see that changing, more flexible hours as well. So where are you now? And I think there's going to be 4 categories of people in businesses when you do that now analysis. And the first top one, those that have got enough resources to get through, and they know they've got the capability of coming through this, and they've probably done that exercise, because that's why they're in a position where they've got enough resources. And they know they'll come out, they'll take a bit of a hit financially, but they know they'll come through. They're sitting in a very good position, and they will have opportunities. And why I say they will have opportunities, they'll have opportunities to maybe buy businesses that are distressed. Once again, having a bit of a look on in the Fin Review this morning, there's a bit of a story about Lenny Ainsworth, and I've met Len a couple of times. He's a poker machine guru of Australia, having founded Aristocrat now, Ainsworth Gaming. He's 96, still working, but he's now moved more into property, and he's seeing opportunities to purchase properties cheap. So those that have got enough resources may see opportunities for acquisitions. Second category are going to be people that have nearly enough resources to get through, but they're confident that when their business starts up again, they'll be able to generate sufficient profit and cash flow to make sure they get through it. They may have deferred some loans in the short term to make sure they've got enough resources, but they know they can negotiate how the repayments are going to be and to make sure they get through. So, and they'll be in varying degrees how comfortable and that they are. But once again, they're sitting in a pretty good position, and they may well be able to see opportunities. How they're going to fund those opportunities may be a bit questionable, and they need to think about that, but they need to be thinking about the opportunities for growth as they come out of it. but maybe it's a bit of consolidation first to make sure that everything's going to be the way they think. And I'll come back to a bit of the where, because they should be still doing some of this where analysis I'm going to talk about shortly. Third category of people are ones that really don't have enough resources and are really concerned about whether they will get through, will be able to make the profits, etc. And they've really got a concern and they're worried. And I'll come back to category 3 people a bit later, because they've particularly got to focus on a few things. Then the fourth lot are those that don't have enough resources to get through. And they're really sitting there in a very perilous state, very perilous position. And often they might not know it. So in these 4 categories, don't make the assumption that people actually know where they're sitting. Because my experiences over 40 years, there's a lot of business owners kid themselves as to what their true position is. They're optimists by nature, and so they're going to be very confident, everything will be fine, everything will be fine. And do they really understand? And that's why that now, looking at your financial position critically, and not just accepting everything's going fine. If you've got a debtor's ledger, so you're selling on credit, how good is your debtor's ledger? If you've got a lot of debtors out in 90, 120 days, are you really going to be able to collect them, or do you have to start saying some of those aren't going to be collectible? If you've got stock, is it saleable? I've seen so many times that people, and they don't do stock takes, but they have this figure they think their stock's worth. You've got to be realistic. You can't kid yourself in these times, because, hoping things will happen is not a plan. You've got to have a plan to how you're going to get through this. That comes back now to the where. 18 months' time. So we're looking at towards December 2021. What's your likely financial position going to be like? I'll come back to what you need to do in that regard, because you need to think about, are we going to be able to trade profitably? What's our new business model? Is it just the same as it was, or have we modified it to reflect the changing economic and business circumstances? Do we have a good relationship now with our stakeholders? Are we running lean? And what's our competitive advantage? Why us? Why should someone come and buy from us? Be it women's clothing, women's shoes, coffee, restaurant, hotel. Do not make the assumption that your customers will come back to you just because you've reopened. Customer loyalty is very, very fickle. And people will make choices based on a whole lot of things. So don't make the assumption it's all going to be as it was. You need a strong competitive advantage. Ask the question, why us, why now? And be very clear as to do it, and don't fall in the trap, we've got superior customer service. Well, why is your customer service better than your competitor? And do you know who your competitor is? So coming back to the financial, you need to do some projections. You need to do your forecasts. My preferred way is a 3-way forecast, which is a profit and loss, converts to a cash flow, and produces a projected balance sheet. Can do a more simplified one, but ideally you want to know what your financial position is. You're going to have to make assumptions, and I would be doing some scenario analysis. What's our worst case we think it's going to come back to? What do we think it's going to be? And what do we think our best case could be? And of course, there's all the grey in between all those, but you've got to have some model. It has some rigor to it to ensure that you're going to get an understanding. And by looking at your position both now and in the future, you can then categorise yourself where I'm sitting in those 1 to 4. If you've got no cash now and no capacity to cash, how are you going to reopen? I've got a licensed club I'm talking to. They've got no cash. They're in fact overdrawn with no overdraft facility. So they've got no capacity to reopen. Unless their members inject money, which is highly unlikely. It's a multi-sport club. The sports have all said to me that they're in no position to be able to inject money. So they're in category 4 and it's very clear. Another club I spoke to last week, they've got a bit of cash available and they're in very much the category 3, where the energy. Because having got to the now and the where, we now got to go back and how are we going to move from A to B? What are the things you need to do? And looking at that, you've got to have very much a strategy. How are we going to reopen? How are we going to generate sales? How are we going to get our customers back? You've got to have a documented plan of how you're going to do that, and not just make the assumption, if I open, they will come. Don't bet on that. Have your plan as to how you're going to do it. Having identified your competitive advantage, that's got to be the basis for all your marketing. You've got to be absolutely getting out there, telling people why come to you and why not go to your competitor. Now, we don't want to bag our competitors. That just gets into a bit of a argy-bargy, but we want to have a very clear competitive advantage, which we want to articulate. We've got to connect and communicate with our stakeholders. Let your banker know your plan, particularly if you're asking for money. He wants to know how you're going to get back and how he's going to get his money back. Same with your landlord. A lot of these tension relationships of the past have got to change going forward. And you've got to go and ask your landlord for assistance. Tell him, don't hide the reality. You know, you've got to be realistic in your forecasting so that you understand, and have a detailed action plan. Really get detailed to the nitty-gritty of things you need to do. Reinducting staff into your plans. What's your, if you're a retail, if you're in a restaurant, etc., what change do we need? Are we going to go no cash? If you're in a hotel, and therefore you've got paper machines, you're going to need change. Your bank needs time to get that change organised because all the coins gone back to the Reserve Bank. So I'll need it probably at least a week. You need your marketing to get there. Have you done your numbers on 20 people? And 20 in a venue, not a room, 100 looking at being in a venue, not a room. So it doesn't make sense. All those things you've got to sit there and actually work through and put numbers to it. Put the numbers to it to make sure it does make sense. And if you're in a, like a hotel that makes no money in your bistro, at 20 people, are you going to make any money? You're going to lose money. And so reopening too soon may actually send you backwards. So you've actually got to think and pick your timing of when to reopen and how we're going to reopen. And I'd be making sure if you've got a database of customers, etc., you want to communicate well in advance of your opening that you are going to reopen and let them know what the rules are going to be about how many people are going to be allowed in, how is it going to work, should people be making appointments to come to a retail store. What's wrong with actually making appointments for people to come in so they know that when they go, they're not going to have to necessarily queue up? Which, for someone that's impatient, I can be a bit impatient. I'd just probably walk away and say, oh, well, I can't be bothered. So sale is lost. So you've got to think about how you're going to get those sales back in, and make sure you understand and don't think your margins are going to rapidly improve from what you've been doing. So looking at that historical financial information to understand and do your forecasting. I cannot stress enough, the two biggest things you've got to think about, I think, and do is some financial modelling to get an idea what you're going to do. And yeah, it's hard to understand what your sales are going to be, but you got to think, you got to back yourself to a certain extent, and that's why maybe doing a couple of different scenarios where you've got to understand your competitive advantage. This is work we do a lot with clients, is talking what's your competitive advantage, going through an exercise to develop a competitive advantage to then use for your marketing. And we're not marketing people, but we understand, having run so many businesses, I understand about marketing. And marketing's opening doors, sales is closing the door to make sure you get the sale. That's in very simplistic terms. So that's where really you've got to focus your attention. But understand, if you're in categories 3 or 4, there's no shame in saying, I can't continue, because the other thing that's going to be really important is your energy levels to get the business firing again. We're going to have a lot of mental health problems going forward. There's been some research and predictive stuff done in the mental health space saying we're potentially going to have a lot more suicides as a result of COVID-19 than actually deaths from COVID-19. That's really sad. The government's put a lot of money into the mental health area, and I know from my experiences how people get down and depressed and anxious around their financial circumstances. And I often say to people I've worked with that I'm a stress reliever. They pass the stress over to me as I try to work out how they're going to solve their problems and get them back on track. And we've had a lot of success in the past. So, and when you're trying to get your business back up and running, you need a lot of energy. You've got to be really positive and have a really positive mindset, but realistic mindset as well. I did a liquidation of a news agency here in the CBD. Spoke to the guy, 13 years he had the business. It was in trouble from day one. He never sought help because every time he and his accountant talked about coming to see me, he always had some reason he hoped that the business would improve. Never did. Cost his family over $1.2 million. And he could have saved a lot of that money, maybe saved his house if he'd taken action earlier. But pride stopped him, and some wish and hope that things would improve. So people that are concerned, even some of those in category 2, it doesn't harm you to get some independent advice, objectivity. And we do that very empathetically, but dispassionately, as saying, what do we think? And we want business to survive. I set up Kestrel Solutions many years ago with a view that the ultimate goal was to put the insolvency practice out of business, because we get to people early enough and we can help them and get them back on track. And that's what's really important now. Don't let your ego and pride, but get that hard objectivity to get through this. And if you get the help, there may be plans, but there is no harm, because some people should. Maybe they're too tired, don't have the energy, don't have the financial resources, or shouldn't put more financial resources in a business that might have been struggling pre-COVID-19. So as I said, realistic financial analysis is essential to it, and also looking what's your competitive advantage and how you're going to change your business model. And don't be afraid to seek help. That's it, Loz.
Fantastic. Thank you very much. There's a couple of things in there. I've seen some great innovation with, in particularly, hospitality businesses, where I've seen them advertising that they're taking, because they can only take 10 people at the moment. So what they're actually doing is taking bookings for 10 people at 100. So a booking of a table of 10. So obviously bringing a group of friends together, $100 a head to pre-book. And that's one way they're securing that they can make sure that they're getting those 10 people bums on seats. I'm loving some of the innovation that I'm seeing.
Others are doing sittings.
Yeah.
So they can get 4 or 5 or 2 or 3 in the day and another 2 or 3 at night.
Yeah.
So they can get more numbers through the door.
Yeah, for sure. I just have one question, and you touched on it a little bit when it comes to landlords, because I know a lot of people, just in some of the Facebook that I've been seeing and just hearing through the BX community, that some of the landlords aren't coming to the party when it comes to having a discussion. What experience have you had with that with any of your clients? Like, do you have some advice for people in that position?
Yeah, look, firstly, if you have had drop of turnover over 30%, in the commercial space, there's a code of conduct which the landlords have to comply with, which means they've got to drop the rent in proportion to your drop in revenue, the turnover. And that deferred rent or reduced rent, they've got to waive at least 50% of that and then defer the other 50%, which has to be then spread over either the life of the lease or 2 years. And if there's a dispute around this, there's a mediation process, which is binding. So I've got a client who hadn't gone to the landlord, and I gave him the draft letter to send off to the landlord. I'm going to be speaking today or tomorrow to find out how he's gone. But there's a mandatory code. That is, if you and provide you meet the requirement. If not, you've got to get that dialogue going. But have a plan. Don't just expect the landlord. Having run a shopping centre for 6.5 years, I had lots of tenants come to me wanting rent relief. And we had a process we went through. If they were part of a franchise, is the franchisor giving them support as well? You know, or are they looking at me just being the banker? I wanted a plan of what they were going to do with the money they weren't going to be paying me, because I didn't want to just be, you know, rob Peter to pay Paul. I wanted them to use a plan to get their business back up on track and understand that. We were very successful in helping tenants get through their problems over, you know, which was over a 6-year period, some of it lagging, some of it partly because when I took over the shopping centre was in partway through renovations and extensions, and so it was impacted by those stalled extensions. It took us time to sort that out and get it all finished. So we were understanding of that, but it's the communication and dialogue, and transparency is very important in that.